Our first speaker, we're going to have a speaker, 20 minutes or so, and then a panel. First speaker is Eduardo Francisco. He's the president of BDO Capital and Investment Corporation, the investment banking arm of BDO Unibank. He's also the co-chairman of the Capital Market Development Council of the Philippines, treasurer, trading nominee of BDO Securities Corporation, and chairman of Everin Holdings Corp. He's going to speak about outlining the obstacles and highlighting the potential opportunities for energy sector financing. Without financing, the projects are dreams and they don't become realities. Without the projects, supply doesn't keep up with demand. With that, Eduardo, I welcome you up to give your presentation. Thank you very much.
Yeah. Good afternoon, everybody. It's really a challenge when you speak after lunch, but I see my presentation really as a segue anyway to the next, the forum afterwards. Because I guess if the gist, where do I click this anyway? Over here in front? There you are. I guess the gist for me really is financing. Fortunately for the Philippines, relatively, financing is available in the Philippines. We're able to do longer tenors. There is excess liquidity. So it's really more, the question really is, are there enough deals on the pipeline? Because the banks are ready to finance. And then also, I guess in general, what are the banks ready to finance? Good or bad, but the banks are ready to finance coal. That's something that we're very comfortable with. It's easy for us to get to understand. It's easy for us to get, relatively easier to get our approvals. But generally, sometimes these are the bigger ticket items, and these are the ones that have opposition, of course. And of course, I'll talk about DOE and FIT, no? But anyway, the next, so in general, in terms of coal, of course, no? So aside from the, I guess the concerns, in fact, I was just reading the paper before here about the, I guess in Palawan, Hagedorn not wanting the coal project to push through. We've had our writ of kalikasan for some other, the larger projects, but if you can get the permits done and get the approvals, the financing is available. Okay? So social issues and permitting seem to hamper the coal projects more than it is from the bank side. And we can do long-term financing. From the renewable side, though, I think that is the bigger challenge, and maybe that's where the bulk of the interest might be, because the big coal players already are talking to us anyway. Just talk to us in the side, and we can already look at a way to help you. But in renewables, at least it's great that I guess Mr. Pete Maniego is here, but he can address all your other concerns on the regulations, but we're honored to have him. But in general, from the banking side, I guess it's still the chicken or egg situation with FIT. So that's the bigger problem, right? And that I think the next slide will talk about that. But if I had my choice in terms of pecking order, or at least what seems to be easier to finance in the Philippines, coal is the easiest to finance. No, I think wind and solar will be next because there are deals that are getting done. Biomass, it's been really spotty. And I think that, in fact, is something that we are a little, I guess, having difficulty getting our arms around with, especially because of the feedstock issue. So it might sound exciting from how it helps the society, how it removes the garbage, how you can use the husks and everything. But the end of the day, or how you can get, sugar cane and bagas. But if you can get the regular feedstock, then the problem will be, how do we ensure that the continued viability of the project will be there? That seems to be the problem. So in fact, the other topic I was asked to discuss was changes in the DOE rules about FIT. When the rules came out, I guess when did it come out? 1 or 2 years ago, when they changed the rule about requiring FIT, or the way it came out. I think at that time it was still Director Marasigan. I came out and saying that, it really disfavored the small developers, no? I still stand by that because if you're a small developer without a balance sheet, frankly, how can you finance your project? Because I will not lend to you without fit, right? And if you do not have fit, and if you wanted to do, let's say, a 70% debt, 30% project, effectively, what I'm telling you is you have to finish the project, finance it. After you get your certificate of completion or your fit, that's when I will refinance it. But you have to finance 100% of the project on day one. So that becomes untenable, especially for the smaller players. Admittedly, for the bigger players who are willing to use their balance sheets, whether they use the balance sheet of their parent company, whether they do a bond offering, which is what we did for the Lopez Group, because we did the bond offering of 7 billion pesos, and then they used that to develop the wind projects. And then once they developed the wind projects, then they got foreign banks to refinance that. Another project we did was for the wind project in Pililla, Quezon, that we financed also, but there were some credit enhancements to get around the FIT. Because otherwise also, how will we lend to a project without the FIT? Now, having said that, again, because the nice problem there is because there are so many applicants for the limited amount of, megawatts available there, from the government's perspective, I can also understand why they did it this way. Because they wanted to weed out the players who would just eventually sell the rights or spin it off to somebody else. They wanted the serious players to really develop. From our perspective, we're ready to finance anyway the players. So the question is just structuring it. There is no simple, off-the-shelf solution to financing a power project in general. Everything is customized because you have your own special situations. But in general, we're there and we can find ways to, the banks are ready to support you, no? In fact, just as an example, earlier they were talking about off-grid projects or projects without fit. The view of BDO, of course, depending on the size, if you come to me with a project with a bilateral contract without requiring fit, I prefer that. Okay? Because offhand, I know already where the cash flows are coming from. But it's you, the developer, who wants the fit. Because sometimes you might get a bilateral contract, but their price per megawatt is lower than what you would get for fit, right? Realistically. But if you just want to hedge, I can lend you based on your bilateral contracts as long as you can make money and you can cover debt service. The other thing we generally do, and I'm not just talking on behalf of BDO, I'm talking on behalf of the Philippine banks. A rule of thumb we have is when you come to us with a project, we do not require that you have contracts for 100% of your offtake, okay, or 100% offtake contracts. In general, we will require, what's the rule of thumb? Maybe 70% of your offtake being contracted. Why? Because when we did our calculations, 70% is enough to cover the debt service. Okay. Just remember, let's say you're the developers. Admittedly, if the project is more profitable, who does the money go to? The owners, right? The sponsors. If the project is more profitable, does the bank make more money? No, because we are contracted by our interest rate. So all we're concerned with is we just want to be repaid. So when we do our modeling, if 70% is the percent that has to be covered by long-term contracts so that your debt is covered, your 30%, whether you do WESM, whether you do something else, is up to you because that's where you can play around with the profits already and make more money. So we're not requiring 100%. Now it's up to you. If the DOE is willing to allow you to enter with the bilateral contract on day one, and that's where you also have the great lawyers like A&O, if you can do a bilateral contract on day one, but they will allow you to switch, or the legal documents allow you to switch to fit later on, that's okay with us. Because if it means that going down from, let's say, 640 to 8 pesos, because 2 years down the road, you can renegotiate, even if you have to pay a separation fee, a penalty. But if when you do the math, it's still better to convert to fit. That means you will get more cash flows in the future. We're okay with that from the banking side. The key is you have to negotiate with the DOE. Will they allow that? Because in our previous experiences, on day one, you should only be discussing fit. You cannot do a side contract bilateral. No? I don't know if that's changed. But if you can have two options, we're okay with that. Because as long as we are covered, the future upside is really for you. Remember, because we're not taking the equity position. Now, in terms of the project, I guess we've done projects where if you have the parent guarantee, that's easy. If you have the standby LC, that's easy. But we can look at that because remember, what you have to make the banks comfortable with us is if you have your point is sometimes when you come to us to borrow, you have no fit. So what does that mean? The risk to the bank is if you do not get the fit when the project is constructed, basically we're relying on WSM, right? So if let's say you are doing, you're expecting 8 or 9 pesos per 9 pesos. But if because you have to do WSM and the WSM price is 6 pesos, so there's a 3 peso difference. What does that mean in terms of the project? Does that mean that the 3 pesos will now make you unprofitable and that means you will not be able to pay us? Or does that mean that you will still be able to pay the banks, but your rate of return or return on the project goes down from 12% to 5%? So those are the things you have to explain to us. Because if we will still be paid, then we might be able to consider lending still the 70% debt. But if in some of the cases, that amount of difference is not enough to make the project profitable, that is the one where it will be difficult for the banks to lend. Okay? But in general, I guess the key I wanted to say is that, and then the next session anyway will be interesting because they will talk about their experiences. We're talking to many developers, many project sponsors. The banks here in the Philippines are always open. As you will see from the PPP projects, the banks are willing to lend large amounts. We're willing to lend in pesos, so we don't have FX risk anymore, right? That makes it easier. You might have dollar importations for your turbines or for some of your equipment, but we can hedge that also for the short term anyway, so you minimize your risk, really. The question is really structuring your deals. And for me, the key really is the bilateral contracts. Or if you're willing to do it outside the grid or whatever, but if you have long-term contracts, we're willing to entertain that. It's not a negative. Because in fact, I had that question, I think the earlier panel. If a town has no power or they're buying expensive bunker at 15, 20 pesos per kilowatt, and you're a wind farm or solar who can develop the project and sell it even at 9 or 10 pesos. My question was, and maybe Pete can explain this later, why will you need a subsidy? Because if you can charge 10, 11 pesos, from a customer perspective, shouldn't I welcome you with open arms? Because from 20 pesos, I will now have to, my electricity bill will go down to 11 or 12. So from the banker's perspective, I don't see that as negative. I see that as an opportunity. You should enter these markets because these are isolated markets. Maybe these are the markets where the big boys find it too small. Diba? Let's admit it. And these are my clients, the Aboitises and the rest, the Meralcos, the Metro Pacifics, right? Even the Alcantaras. These are all my clients. These are the big boys. They're fighting for the GN powers or fighting for the 300, 600 megawatt projects. But there might be these 10, 20 megawatt projects that are lucrative, but not worth the time of the big boys. So maybe my advice is for the smaller players, those are the ones you focus on because those are the things that the bigger boys will say it's not worth our time to do the feasibility, to commission the staff because it's too small. The San Miguels will not be interested. You look into that because the banks are going to still look into that, and if it will help the people in that area, why not? We will be there to help you. Now, in general, we're doing term financing. You can easily get 10, 12-year financing for your power projects. So I think we will spend the time with you if you do your homework and you get all your approvals and ducks in the right place. Okay. So that's really all I had to say. I think I have 5 minutes left because I wanted really just to, I guess, position this towards the next topic. But if anybody had a question, I'd love to answer your questions. Or the other thing I was going to do was volunteer during the next panel. I'll just stay also here so that if anybody has any questions, because sometimes you want to ask a question in private, I'll just answer your questions or meet with you for coffee. So, Thomas, if that's okay. I mean, I have nothing else to share unless somebody has a question from the audience. Okay? So, again, we're open for business. Philippine banks are willing to lend. In fact, we lend even without ECA financing, right? So we can do it without ECA support. We'd love it when the ECA comes in, but there are cases that the ECAs do not come in, or the cases many companies have come to me. I'd love to get somebody here from the ECAs. I'd love to get ECAs, but before I get approval and the funding from the ECAs, you know, the 200 or the 500 megawatts will run out. So I can't wait for them. So we're there to support you, the private sector. So thank you.